Awesome. Hello, everyone. Today we have the great pleasure to talk to Alex the Machine Mashinsky, a Web1, Web2, and Web3 legendary entrepreneur with a super impressive track record of building companies. So, Alex, you've built, I believe, 7 companies, did 2 IPOs on the NASDAQ, helped build the internet infrastructure with voice over IP, and more recently, built Celsius Network from 0 to about 25 billion in asset under management in just a few years. Your main mission is to educate people about the timeless principle of investing and help them earn interest on their crypto so they can reach financial freedom faster. I believe Celsius has paid about $1 billion US dollars in interest so far to its community since the beginning. So you're really delivering big time on this mission. Thank you so much for being with us today, Alex.
Thanks for having me. Sure.
Awesome. So for those who do not know you, can you please tell us briefly who you are and how you help build the Web1 and Web2 infrastructure?
Sure. So I was born in the Ukraine, on the western side of the Ukraine, a little town called Chernovtsi, and first immigrated to Israel, did the military over there and school, and then came to the United States and really focused on, I was lucky, I was right there at the beginning of the internet revolution, and got to work on the voice over IP when basically the hottest tech at the time was asynchronous transfer mode and time division multiplexing. And I was like telling everybody, no, it's all going to move to TCP/IP, and people were like, TCP/IP, that's like a experimental network that only universities use. And I'm like, no, that's the future. You don't understand, and so it was definitely not an obvious thing. I think most people were betting on Ethernet and betting on all kind of other protocols, but not on TCP/IP. And so I built the first gateway, VoIP gateway, in 1995. And AT&T was my large customer. And then we deployed this all over the world and built ARPANET, took it public. And it was fun, in my 20s, right? So so the first wave was all infrastructure wave, right? So if you had anything that had to do with internet infrastructure, you did well. And the second wave, when we had companies like Facebook and others come in, I was not really excited about that. I felt that all the social revolution is not good for us. I'm not going to help create something that was not helping us. It's distracting us. Like I watch my kids just spend every available moment either playing a game or whatever. They can't read a book, they can't watch a movie, they're ADD, so it's definitely something we need to fix. And so I focused more on other type of solutions that try to solve kind of virtual machines and like infrastructure stuff, and also put the wireless in the subway. So I built Transit Wireless, co-founder of Transit Wireless, which put 5G and free Wi-Fi in New York City subways, enabling 8 million people. We were the last big city in the world that didn't have wireless underground. It was crazy, right? So we solved that problem. And more recently focused on crypto and on kind of enabling the second killer app. Celsius invented this idea that you can earn yield on your crypto. And because banks and financial institutions don't pay you anything, we look like magicians delivering 8% or more on your stable coins, right? So now everybody's trying to do it. So we look less like a magician, just like the OGs. But like you said, that we paid over $1 billion in coin value to about 1.5 million users worldwide, and proved that this is a scalable and reliable utility for crypto. And with that, we're helping bring the next 100 million people from TradFi to CeFi.
Awesome. So maybe just to kind of understand a bit better your mind, if we go back to Web1, and you said basically for you it was kind of obvious that this TCP/IP would basically win. Can you explain why? Like, was it just a gut feeling, or like What did you understand that other people basically didn't understand?
Yeah, that's a really key question that you're asking. The TDM network existed for, I think, 50 years prior to the internet birth. So everybody but just assumed that faster TDM or some kind of ATM, asynchronous transfer mode, where everything had a slot, uh, um, would be the future. And the internet was really this fuzzy logic, best effort network, right? That was really designed for something to survive a nuclear attack, right? So people were like, that's not for everyday use. This is like the backup network. But what happens is in technology is that the largest network always wins, meaning if you have a small network and you're competing with a large network in telecommunications, you will always lose because the large network has economies of scale. And I very quickly realized that okay, if a TDM network charges, for example, $3 a minute for international call, and a voice over IP network charges 10 cents, all the traffic in the world is going to move from the TDM network to the TCP/IP network. And the same way today, the new network, the new cryptography-based blockchains are going to be the largest networks in the world. Already today, the largest supercomputer in the world is the Bitcoin network.
Yeah.
So we're already there. It's not like we don't have to project for it. It's actually 10 times bigger than all the other supercomputers that the NSA has or the government has or anybody else. So the largest network today is the blockchain network from a computing power standpoint. And money, all the money in the world is going to migrate from Swift and these kind of traditional TDM networks to this new distributed ledger blockchain networks. I know it sounds crazy, but people have to, and one more point, very important. So the people thought that also that it's going to happen very quickly. And I kept telling people, no, it's going to take years, right? We're over 30 years into voice over IP. Again, I wrote the patents 1994 and built the first gateway in 1995. So we're almost 30 years into it. And still only about 50% of the population, maybe 60% of the population is using voice over IP worldwide, right? So this is not a fast-moving trend. The adoption curve is very, very slow. And here, now with money has even slower adoption because you need much higher trust, right? If I try your VoIP app and it doesn't work, I can always go back to AT&T or some other carrier. But here, if I trust you with my money and you lost all my money, I cannot go back to anything. I just lost all my money. So the barrier for adoption for crypto is actually much higher, and most people think it's going to happen. Of course, everybody's going to come and earn 8% interest just because we can earn it, and the answer is no. It's actually going to take a very long time.
Yeah, that's super interesting. And we're actually going to get back into this right after. So just maybe last question before we get into basically the meat of the stuff today, which is the crypto part. So did you have basically an aha moment in Web1 that just made you just decide to go build a startup, basically? Because you said, oh, for me it was obvious that the largest network would work, but like, did you try something or did you do something specifically that made you really realize, like, holy shit, like that's the thing, I need to go now and do something there?
So again, I was lucky that I got to experiment with different networks. I was in the military, so I worked on like military networks. Then I worked on X.25. Most people wouldn't even know what that is. But so I worked on, that was a telex-based protocol. And then I worked on frame relay, and then I worked on, TDM, the other TDM networks and so on. So ATM and so on. So luckily I was exposed to many different, more networks, I would say, that most engineers or most people get exposed to. So I got to understand the benefits. It's not that the other networks are bad. Some of them are much more secure than, for example, the internet, right? Some of them are even faster than the internet. But what they don't have is they don't have the scalability and basically the open nature of the internet protocol. And again, we were lucky in 1996, we meaning we the people worldwide, we're lucky that in 1996, the US government also passed special laws that protected companies offering internet services from having all of these monopolistic clawbacks or shutdowns or restrictions. So the phone company could not restrict you from offering, for example, voice over IP on top of their infrastructure, right? And so those things don't exist today in crypto, right? Today, the financial companies are fighting very, very hard to put every restriction possible on crypto companies because they don't want to lose the battle over all the money in the world, right? They want this to take much, much longer and maybe even kill it because they have a beautiful franchise. Banks make tens of billions of dollars in profit every year. They don't have to do much. They just take your money for free. You give it to them for free, and they lend it to somebody else on their credit card. They charge that person 20%, and they pay you 0.1%. That's a great business, right? So why change that? Why create something, for example, like Celsius, where you can earn 7, 8% because Celsius lends at 9 or 10%, which is still half of what people borrow on their credit card, right? So everybody wins. The borrower wins, they pay half, and the lender wins because they earn almost 100 times more what their bank pays them. So those are the kind of the differences. Again, telecom is easier because the restrictions were lower. Here we're talking about money, so there's much more regulation. So it's almost like I always say that I was in the junior leagues when I did voice over IP. That was fighting the phone companies. Now I graduated to the Premier League, fighting the banks. That's no one else is crazy enough to pick up a fight with all the world's largest banks.
Awesome. So maybe kind of as a recap for this first part, so the key thing and basically the similarity between Web 1 and kind of Web 3 is that an open network is basically much more likely to be much cheaper and reach network effects because it's cheaper and better, so more people will participate. And so it's much more likely to win in the long term, but it's going to take a lot of time, and even more so now because we're talking about money and there's a lot of friction still, and you can basically still, because there is...
So one more thing, the legacy guys, right, the phone companies couldn't run both networks because they had to run a TDM network and a TCP/IP network, right? Because they had to provide internet, but they also had to maintain their own infrastructure. So their costs were much higher than new guys who just came in and ran everything on the TCP/IP network, right? So what happens is that the legacy providers actually has a higher cost. Even though they're 1,000 times bigger, they have higher costs. Same thing is happening now. The banks that have to offer both crypto and non-crypto services are having much higher compliance and other costs than the newcomers who are just running on DeFi or running on CeFi. So the history, history normally does not repeat itself exactly, but it rhymes. And here we can see a lot of the same things happening between Web 1 and Web 3.
Awesome. So let's talk about
Web 2 was just a waste of time for everybody.
Okay, so let's talk about Web 3 directly. I had a question about Web 2, but I also figure out it's not as interesting. Anyway, so how did you discover crypto, and was it obvious to you at first?
Yeah, so this is an embarrassing story. I should add it. I have a list of failures, of things I failed at on my website, Mashinsky.com. I need to add that in there because, you learn from your mistakes. You don't really learn from your successes. And 2009, one of my coworkers, one of my employees, showed me Satoshi's paper and said, "Look, this is the future, and we really need to work on this." And it's only 9 pages, so I read through it very quickly, and I was like, "This is the dumbest idea. This is never going to scale. It consumes so much power. It's really not a great solution for the problem, And because I worked on trying to solve the double spend back in 2004, I was trying to attach money to email, so I could send you an email, attach money to it, and you basically could spend that value attached to the email. And I tried to solve the double spend by managing who has what rights to that attachment and so on. So using cryptographic signatures, but basically couldn't solve the problem, couldn't make it secure and safe. So when I looked at Satoshi's solution, I really didn't get it. I gotta admit, and usually I'm pretty quick on these things. Usually I see the future very quickly. That's my kind of like, if you ask, okay, Alex, what's your strongest skill? I always brag that is one of my strongest skills, is being able to project myself into the future and see if something can work or not. But here I basically discounted or did not understand the strength of the double spend problem solution, and how separating the miners from the people who are using the network, giving them different incentives, was a brilliant idea. It was a missing piece, because he or she used all the stuff that we already had, Merkle trees and cryptography, and all that stuff existed for 30 years, right? It's not, most people think he or she invented the whole thing. But like I know Scott Stornetta for a long time. He's the inventor of the Merkle tree, 1991, right? So I was working on Voice of IP. He was working on the Merkle tree at the same time, and so it's not a new idea. It's just completing the circle, right? Putting the last chain to complete the circle is really the brilliance of what Satoshi created, and I didn't get it. It took until 2014, until Mt. Gox blew up, for me to realize that how is this possible that the whole thing blows up and people continue to use Bitcoin. Like, it just, right? So I had to literally reprogram my brain. I had to go like neuron by neuron, line by line of code. And every time my brain said, but it's not possible, or it's not good, or it's not efficient, or it's not fast, I had to convince myself that solving the double spend problem is a bigger solution than all the problems or deficiencies that Bitcoin has. And that's really took me some time. I mean, it took over a year to kind of really be convinced that. So I was a Bitcoin denier, and now I'm carrying the flag for Satoshi, so.
Okay, super interesting. So basically the Mt. Gox, which was basically this exchange that got hacked, and basically pretty much the only exchange
people
where
lost
Bitcoin
all their
was
money.
trading.
Yeah.
Exactly. So that's kind of your aha moment, but it's not really an aha moment because it still took you time. And I think it happens to everyone. Basically, you need to be like intrigued and then get into it and start to research and shape your mind. But
Mt. Gox convinced me that I was wrong, but I didn't know why I was wrong, right?
okay.
So I all of my assumptions were still true. Bitcoin is the slowest database ever existed. Bitcoin consumes more electricity than anything else. Bitcoin consumes communication and network infrastructure, computing power, like nothing else, right? Because my entire career was about building things faster, cheaper, and better. For example, right before Celsius, I was CEO of Novotel Wireless. We launched the first 5G device in the United States for Verizon. We actually built the first 5G device, before Samsung, before everybody else, the MiFi 1000. So for me, that was okay. Here's a network. It's 10 times faster. Let's build the device. Let's make sure it's not hot and it works and everybody can use it. Beautiful, right? Just amazing stuff. So that's easy, right? Here is something that is 1,000 times slower than your iPhone. Your iPhone runs 1,000 times faster than the blockchain network, right? So how is that going to work?
So basically, what did you understand at some point that about Bitcoin specifically, I guess, because that was because Ethereum was just at the very beginning. What did you understand that made you basically leave your previous company as a CEO to say, I need to do something in this space because this is basically the next big thing, a new paradigm shift? And basically, how did you leverage your previous Web1 and Web2 understanding of paradigm shift to understand that this is one?
Yeah, so the the problem that Bitcoin's trying to solve is all the money in the world, right? So there's no bigger problem than that. I mean, if you think of the internet, I always say to people that crypto is bigger than the internet, and they laugh at me. They go, "Come on, Alex, you have good ideas, but this time maybe you need some medication. Maybe you need to retire. What are you talking about? Like how can something be bigger than the internet?" And there are already things that are bigger than the internet. For example, our electric grid is bigger than the internet. What does it mean? It means that there are many places in the world where we have electricity, but we don't have internet. But there are very few places where we have internet, but we don't have electricity, right? So the same thing here. So money, for 700 years, money ran on a double entry accounting system, right? So I think the Venetians or the Medicis, I don't remember who invented it first. They all fight with each other who invented it first, but they invented the double entry accounting system, right? And they started lending money and they created the first banks. And since then, basically nothing has changed. Our banking world, or finance in general, is the same system for the last 700 or 800 years, right? Now we're coming and we're saying, look, there is a triple entry accounting system. Instead of me and you relying on each other, which is a single entry accounting system, we use double entry, meaning we have a bank and we both rely on a third party that records the transaction on our behalf, and they know who owes whom what and who has what. Triple entry accounting system is, if there is 8 billion people on the planet, 8 billion people are going to have a copy of everybody's ledger. Everybody has a copy of everybody's ledger, right? So we don't need an intermediary. Everybody knows exactly if I have 1 Bitcoin or 0.1 Bitcoin, because everybody has a copy of the entire ledger. So that is a leap forward. This is not a little change in the double entry accounting system, right? So, but it's very inefficient, right? You're taking terabytes of data and you're basically saying, instead of these terabytes of data sitting in one database in JP Morgan's bank, and they know all the answers, we're going to give it all that information to everybody, but don't worry about it. It's safe. You know, no one can do anything on it because it's cryptographically safe. Well, we had to prove that, right? So it took at least 10 years, Bitcoin running without, Bitcoin didn't miss a beat, never went down, never missed 1 second for 13 years now, right? So we had to make sure that it's not hackable, that it's it can actually produce blocks for a very long time, that the incentives are right, that people can use it, and so on, so on. So we had to build the trust necessary for people to finally say, okay, this network is actually something we can use for store of value. Even though Satoshi wrote it as a peer-to-peer cash system, meaning it's going to be a payment system, he or she didn't understand themselves that really the killer app is going to be store of value, because our banks and our governments are going to continue printing money like crazy, right? So that was the first killer app. And the second killer app is, like I said, yield, the ability to do loans and borrowing and earn income, passive income, which effectively disappeared from the banking world. So those are two killer apps that don't have a solution. There's no other solution, right? You cannot, the dollar lost 95% of its value since 1971, since we went off the gold standard. The ruble is now, 1 ruble is worth exactly 1 penny. It lost exactly 99% of its value in the same period, right? So the dollar is the best performing fiat currency, and it lost 95% of its value, but it still did 5 times better than the Russian fiat currency or some other currency, right? So that is what we call normal, is things that lose most of their value over a few decades. So we wanted to get the opposite, and Bitcoin is up 20 million percent in 13 years, right? It outperformed anything that ever existed in the history of men. So not because Bitcoin is so good, it's because everything else is so bad.
Yeah. So basically, you talked about Bitcoin and yield as killer apps, and you said basically this triple entry accounting is kind of a big leap, but it's probably, or it was probably, and still probably for a lot of people, pretty difficult to understand kind of why or how. So can you maybe, talking about kind of Ethereum, Web3, basically explain why blockchain is such a no-brainer, both as an investment for investors and as an underlying infrastructure of the new internet for builders?
So most of our financial institutions, Visa, MasterCard, major banks, on average, right? On average, they consume about 3% of the GDP around the world, right? So if you look at, okay, what is global GDP? How much in fees do these companies charge? It's about 3%. So it's a tax. It's a 3% tax on everything that goes think of it as like an hourglass, and the middle of the hourglass is very thin. That's where the banks are. They sit in the middle, and anything that goes up or down, they take 3%. Doesn't matter where it's going, up or down. You turn it this way, you turn it that way, it doesn't matter. The bank always collects the 3%, but they don't do anything. They just let money flow this way or that way, right? And when they make a mistake and they blow up, right, the hourglass clogs, we the people have to come and bail them out. That's why Satoshi created Bitcoin. I mean, in the first block, there's embedded language from the Financial Times talking about how the Bank of England had to bail out all the British banks, right? So there's no question about what was Satoshi was so angry about, right? So the solution is to create a new network that does not require any intermediaries, does not require any of these toll collectors to basically grab 3%. So if you can do better than 3%, you're a winner, right? Now, most of us can write code that charges almost nothing for financial transactions. So the overhead of Bitcoin and Ethereum and other networks is really what is the cost of the network, right? So for example, in Bitcoin, the cost of the network is mostly the mining cost, right? It costs billions of dollars to run the Bitcoin network every day. It's not cheap, right? Every 10 minutes, we give her 6.25 Bitcoin reward to the miners every 10 minutes, right? So the higher price of Bitcoin, the more expensive it is to run the network. Besides that, you need huge infrastructure, right? Hundreds of thousands of machines and hundreds of millions of users to transact on the network. But even all of that is much cheaper. You can move right now, you can move $1 billion worth of value on the blockchain, on the Bitcoin blockchain for basically a few dollars or sometimes less than $1, right? The Ethereum network is more expensive. It has much more congestion, but it's actually cheaper to operate. It has much less mining costs. But the gas fees or the cost to transact on the network sometimes jumps to $300 per transaction. So if you have a small transaction, obviously you're still going to use Visa or MasterCard or your bank. You're not going to use Ethereum, right? So we need to scale these networks, but the infrastructure is ready to basically take on the large transaction, replace SWIFT, replace payment networks, and do all of that with less than 3% of the GDP.
Yeah, absolutely. So maybe like for people to kind of project themselves even better in the future. So the key principle here is that what Bitcoin did for the financial system, which is basically removing the toll collector, basically Web3 can do for any other industries. And now we're kind of seeing it with some potential promises with NFTs and different stuff on the top of Ethereum for arts, music industry, etc. So basically you're basically much more efficient because you're removing the toll collector and you're redistributing all these fees taken to the users and the builders of the applications
right,
and the network.
Exactly. And now the artist or the music creator determines how much they keep of the value of their music, right? Until now, the basically Sony or some other large company decided how much they pay the artists, how much they pay the musicians, how much they pay and they basically charge for distribution, and then there's a retailer, and there's like 20 people involved, right? Versus, okay, I'm gonna publish my own music as NFT, and every person who buys it owns that specific NFT, and they pay me, and I keep 100% or 95% of the value of the music I created or the image I created, and so on. So it really eliminates completely the middleman and the toll collectors and creates new business models. So what we're seeing right now is this Cambrian explosion of innovation, of experimenting in new business model. You're seeing people creating ideas that we all look at in the beginning and say, how is this not going to work? And it works. Why? Because the customers want the music and the creator wants to go direct to consumer, and it does work, right? And sometimes it fails. So we're still at this innovation phase for everything that's DeFi or gaming or monetization, right, of Web3. But it's all relying on this infrastructure that I was talking about, that is Bitcoin, Ethereum, everything is a fork of one of those original ideas, and it's beautiful. I mean, it's really 1,000 times faster than banks, because the last thing banks invented was the ATM machine, and that was 1975. I don't think there was any new innovation since.
Yeah. So you said before that since 1971, the US dollar lost about 95% of its value. So probably, let's say, about 99% in the last 100 years, which leads us to our next question, which is kind of an introduction to Celsius, which is, why is it so important for people not only to save money at the end of the month, but also to invest this hard-earned money?
Sure. So the interest rates are very low, and people think that just because the Fed is charging banks zero, banks have to pay you almost zero, right? So they have zero expectations of earning money on their money, right? Like even on your bonds, you barely earn any money, right? So inflation last month, I think, was 7.5%, but 30-year bonds pay you 2% if you keep them for the whole year. It pays you 2%. So they don't even keep up with inflation. And that's the best thing you can get. If you have cash, you lost a lot of money on your cash because the US government keeps printing trillions of dollars worth of cash. So what are your options, right? There's very, very few options of where you can invest and how you can keep up with inflation or keep up with prices of real estate or anything else. And today banks basically, again, they charge, when you need to borrow, they charge you 25% on your credit card. But when you give them cash, they only pay you 0.1%, right? So the formula doesn't make any sense. And the reason for it is that there's such high concentration of banks. Most people, if you ask them this question, will say, oh, it's because the Fed has the rates at zero. If they raise the rate, the banks will pay us more. Banks make, JP Morgan brags about how they have 17 or 18% return on capital. They brag about it to their investors. Go look at their quarterly filings with regulators, right? So the problem is not the banks don't make money. They just choose to give all their profits to their shareholders instead of giving it to their customers. So the innovation about Celsius, the main innovation, besides inventing the technology of how you create yield and capture yield and distribute yield, was how about we take all of that value and give it back to our customers? Do what Satoshi wanted us to do. Instead of copying the Wall Street business model, putting as much as you can in your pockets, how about you give it back to the community and you scale the community? You solve the scalability, the problem we talked about before of how to convince people to trust Ethereum or trust Bitcoin. Well, let's give them 8% interest and use that to convince them to come and try this new network. That's what Celsius innovated. That's what Celsius invented. And then we said, okay, we're going to do it in one of two ways. You can earn Ethereum on Ethereum, or we have a token, our own token called Cell Token. You can earn in this token. And if all the people join Celsius, it's going to be a bigger network. Everybody's going to do better, right? So before Compound, before all these other companies, Celsius was really the first one to kind of invent this idea that you can earn or you can farm on a token and basically create value for everybody.
Absolutely. So basically the key takeaway on why people need to invest their money and not just save it in cash is because of this constant money printing from central banks. Where every time there's a crisis or a war to fund or whatever, they're just printing money out of kind of thin air, which basically makes your money value less and in relation to all the fixed assets, so real estate, stocks, etc., which is the main reason why most of them are actually going up. And the problem is retirement. The definition of retirement is accumulating enough assets so you can basically live off your passive income from those assets. But because of this money printing, these assets become more and more expensive and people don't earn more money. So there's this thing called wage deflation. And so because they don't earn more money, if they don't invest, they're basically they're never going to be able to retire, basically. And that's
exactly right. So again, look at the dollar. Last 2 years, the US printed about $10 trillion, which represents about 40% of all the money dollars that ever existed. So in 2 years, they printed 40% more money, right? Your salary didn't go up 40% in the last 2 years. Your savings didn't go up 40%. So what happened is that there is the inflation in the last 2 years was 40%, even though the government tells you it's only 3 or 5%. In dollar terms, in monetary terms, inflation was 40% or 20% each year, right? But you didn't benefit from it. You did not. It dilutes you, yeah, right? Your purchasing power decreased almost by half. But at the same time, your earnings and your savings didn't do anything. So the challenge is, how do you fight that? And very few assets continuously, right, do better than inflation, or better than the stock market, or better than the bond market, and so on. And that's what really so special about Bitcoin.
Exactly. I think if you divide most of the asset classes by a central bank balance sheet expansion, you get something flat or even going down, except the NASDAQ and Bitcoin or crypto in the last 10 years.
Yeah, so I think it's called the Cantillon effect. That's when money created first goes into the financial market. So last year, the NASDAQ was up 40%, exactly what the money printing was, right? So because all that money ended up going to the stock market first. And now it's propagating as inflation, right? Because basically, as the money makes its way out into different parts, people basically see, oh, I have pricing power. I can raise my prices. And people still buying it, right? So because they feel rich, so they can still buy the cars or the whatever the product is or the service is.
Yeah, so people basically think they're getting richer, but it's kind of almost only nominal terms, whereas it's the real term that you should look at, but it's barely keeping up with the central bank money
They're like
printing,
the
except for a
hamster.
few asset classes.
They're running faster and faster, but they're not really moving. They're just the wheel is spinning faster and faster, but they don't have more money or more value. They just have to work harder to keep in place.
Yeah. So basically with Celsius, you're basically helping big time to fight this by generating yield. So can you explain us very briefly how you earn yield on these crypto assets?
Right. So let's first explain how banks earn yield, and then we will see if it's the same thing. So most people don't understand that money makes money. They think that when I ask people, okay, where is money created? They think the government prints money or whatever. And I'm like, well, let's take a company. Like, let's say when Google went public, a day before it was public, it was worth X, and the next day it was worth 100 billion. Where did that 100 billion come from? The government didn't print 100 billion, right? It's just a number on the spreadsheet, right? So where is that money being created? So most people, unfortunately, we are not being taught these things either in high school or in college. Even people with PhD in economics can't really explain to you how the monetary system works. So what's really important to understand is that we're all connected, and banks make all their money from your money. You have leverage, you have power, because banks use your capital to put it into things that they need to make more money, and then they keep the profits to themselves. So they do things like securities lending, they do things like real estate lending, they do things like margin borrow, where you have, let's say you have an Apple stock and you need a loan, they'll give you cash without you selling your stock, right? So they do future funding, they do cash and carry, they do all kind of things that basically are supposed to be risk-free or low-risk transactions that help the banks earn money on the assets you gave them. And in exchange, you get safety, that your assets are kept in a good place, and you get a little bit of interest, right? So Celsius does the same thing, but instead of bonds and stocks and cash, because we're not a bank, we're not allowed to take dollars, we're not a financial, like a chartered institution, we take only crypto assets. So we take Bitcoin, Ethereum, 50 different crypto assets. We pay yield on it, and the yield comes from us doing the same functions. For example, you need a loan against your Bitcoin because you want to pay a credit card that 25% that the bank is charging you, right? We'll give you a margin loan, meaning we'll lend you dollars. You pay us interest. We use that interest to pay other people in the network. But the community gets to keep most of the value, most of the dollars created or the yield created inside this community. So that's the process.
Yeah, so basically you're doing pretty much the exact same as what banks have been doing for hundreds of years, but instead of giving back almost nothing and giving everything as a profit to the shareholders, you basically give back a bigger chunk to people who deserve it, because it's thanks to the people that you have funds to make money on this money. And that's basically the big difference.
Yeah, and our slogan is do good first and then do well, right? So it's okay to we prove that you can do good and do well, right? So, which is shocking, right? Most, the joke on Wall Street is if you want a friend, if you work on Wall Street and you need a friend, go get a dog. Don't look for friends on Wall Street. So here, if you go on Twitter or look at our community is a real community. They help each other, they work together, they love the company because we're really helping people achieve financial freedom.
Yeah. So basically, you are applying the banking business model to the crypto philosophy, which is basically helping people participate and all that stuff. Great. So, Pep, can you explain us how safe this crypto lending is? Maybe you can talk about the collaterals and all that stuff, so people can understand actually what's going on and how basically kind of pretty safe the entire thing is, the process.
Right. So, so obviously, there's risk in everything. You wake up in the morning and there's more risk than when you were asleep. So, and there's risk with the banks, but banks have FDIC insurance and they have all kind of other programs that supposedly are trying to protect you. We are not FDIC insured. We're not a banking institution. So you're really relying on Celsius to act in your best interest, for Celsius to do things in a safe way. And that's why us being around for almost 5 years, I think, kind of demonstrate, okay, is this company knows what they're doing, or they're going to disappear tomorrow? Do they have a reliable management team? Do they understand the business? Can they keep the coin safe? Obviously, we see a lot of hacks and a lot of scams and a lot of bad things happening in crypto. So we, I think, proven over a long period of time. We've paid interest now for, I think, 4.5 years. We paid interest longer than anyone else on the planet, right? In interest in crypto. So I think Celsius has proven itself as the top brand. I think we also manage more assets than anyone else in this category. And like you said, we paid to the community more than anybody else. There isn't anyone in crypto who gets close to $1 billion, right? So all these things together are kind of indications, but there is risk. There's no question that when you move your assets from fiat world into the crypto world, that is risky by itself. And then when you give them to Coinbase or Celsius or somebody else, there is risk involved with that as well, right? So you have to decide, can I keep the crypto asset myself? Do I keep it on a key, on a hardware key, or I keep it on my computer, or I keep it just a phrase, right? If you know what you're doing. But most people cannot do that, right? The reason we're saying bring the next 100 million people instead of the past 100 million people into crypto or into Celsius is because most new people, it's like voice over IP. We're using voice over IP right now when we're talking. But do you know how voice over IP works? So you just clicked on an app and they set up everything for you. So you're using a centralized service on a decentralized network called the internet to deliver the TCP/IP/UDP connectivity for you, so we can transact, so we can interact on the session. So crypto kind of works the same way, right? It's fully decentralized, but it doesn't mean that the services on top of it and the way people are going to consume those services are not going to be semi-centralized, which is what Celsius is.
Awesome. So we talked about the risk of like basically what the process of what you're doing is to earn the yield. But if someone asks, how safe is it to hold the majority of my crypto assets with Celsius today? What do you answer?
Yeah, so we, first, I think we have the top security in the industry. We have, I think, close to 40 people just in our crypto security. This is just making sure the coins are safe. So most DeFi protocols don't have 40 people in total. So Celsius has more people protecting your coins than other projects have in total, employees in total, right? So you have to ask yourself again, like, okay, am I trusting this company because I want to earn yield, or is the first thing I want is really the best security for myself, right? So, and in the 5 years, we have not had any incident of somebody breaking into Celsius and stealing anything from Celsius. And as you know, many other companies that operate have that happen to them, once every few years, or at least once, right? So I think we're one of the very, very few companies that can say we were never hacked, assets were never stolen from us, which is the fundamental. That's the bedrock. That's the foundation of what you need to have. On top of it, you need to say, okay, well, how much interest are you earning, right? Is it, if the interest changes, like on DeFi, the interest could be 11% at 11 in the morning and 2% at 2 p.m., right? It just changes like this, right? Celsius publishes a rate that is good for a week, and we may move it up or down, but we don't move it that much. It moves a little bit up, a little bit down, and on average, Celsius paid higher rates than DeFi for all the assets that we have. So really what you're getting, if you think about the NASDAQ, let's say that you bought the QQQ, and that's the index, right? The NASDAQ index. You are lucky if you matched what the stock market actually did, because you have fees on top of it. You pay 0.5% in fees or whatever. And then sometimes they don't exactly match the index and you're a little bit behind. But I think the statistics on Wall Street is that 95% of funds underperform the index. Yeah. What Celsius has done every year is not just that we beat the index, we don't charge any fees, and we beat the index by 4, 5, 6%, right? So if you used Matic with Celsius, you beaten the Matic index by something like 12%. Every year, you beat it by 12%. So you have more coins, you pay no fees, and you have a very safe place to store it, right? I mean, that is something that Wall Street has never delivered to any user.
Awesome. So basically, you're doing a lot of amazing stuff in the banking world, which is basically a very old word. So can you tell us about how you deal with the regulations when you're not only trying, but you're also massively succeeding at revolutionizing an industry like the good old banking world?
Yeah, so finance, like I said before, finance has much more regulation than, for example, the telecom world. Telecoms still have the FCC and all kind of other agencies, but they're much less, I would say, aggressive than the financial regulators. And what Celsius is doing is really delivering. What Celsius is doing is really delivering this capability to all of our users in a very simple way, right? So regulators are definitely want to protect the users. There's no question. It's not like regulators are coming and just saying, oh, we hate crypto and crypto is bad and we just want to shut it down. What regulators are saying is, look, this is a risky, brand new and high risk environment. Are you sure that these people that you are helping, you think you're helping, are you sure that they understand what they're doing? Are you sure that they can make proper decisions and can understand if something is good for them or not good for them, or risky or too risky, and so on? So they usually separate users into groups. They say, okay, anyone who's already rich, somebody who has over $1 million, they're considered accredited investors, and we're willing to let those people make their own decisions. But anyone who doesn't have that much money, who might be poor or never saved anything, we assume that they don't understand enough. And because of that, we're going to put restrictions on what anyone in crypto can do, and make sure that those people don't get hurt. So those are all good reasons, right? Those are all things that are not bad, but obviously they hurt the crypto community because they slow down adoption and they require all of these terms and conditions and rules and checking and KYC and AML and everything else. So we are a good actor. We always were a good actor. We always do everything we can to follow all the regulation around the world, instead of many companies who just hide offshore. They go to some island and say, hey, we're on this island. We really didn't try to get any Americans as customers or whatever, right? So I think if we want to grow the community, we will have to comply with the regulation, but we have to work hard to make sure that the regulatory framework is helping people achieve financial freedom instead of restricting them from achieving financial freedom.
Yeah, and I think it's super important. We had the CEO of Swissborg last week, and basically was saying the same. Was saying regulators are actually, a lot of them are super smart people, and they're not bad people. They just want to do things well and actually work together so we can basically move this industry forward, but by making sure that everybody's protected. Also, can you tell us basically what you think, because this is a massive topic right now, Russia and Ukraine, is what's happening there good or bad for crypto, and why?
Yeah. So first, obviously, again, I was born in the Ukraine, so it's a very, very sad and difficult situation for the Ukrainian people, also for the Russian people. I'm sure most of the Russian people would say we don't want to go to war with our sister country, Ukraine, right? So here we have basically, I think Putin is very concerned about his legacy. He might be sick, he might be at the end of his career, and he's thinking, okay, what am I leaving behind? And he wants to kind of deliver to the Russian people this united. I was born there when it was still part of the USSR. So the Ukraine was part of this Russian empire that was trying to become the most powerful empire on the planet, right? Competing with the United States and so on. So he wants to go back to that. And because of that, he's willing to basically take away thousands and tens of thousands of lives so he could go to the grave saying, hey, I delivered on this Russian empire. I built a little bit back of the glory that it used to have, right? So obviously, I think most of us disagree with that as a good idea. And unfortunately, again, people are dying every day. People's lives are shattered. They become refugees. They have to leave their families and their houses and their life behind. So it's a very painful situation. But that disruption creates an opportunity, right? And if you think about the fact that right now you cannot go to a Ukrainian bank or a Russian bank and withdraw money, basically there are restrictions everywhere. You cannot buy dollars. You cannot do. You cannot trade in the stock market. All these markets are closed. And now, for example, Apple stopped selling things in Russia. You cannot buy an Apple phone, even if you have the money, even if you manage to get the money out, you cannot walk in and buy Western goods, which is what it was when I was there in the 70s, right? So in early 70s. So these are very difficult situations, but there's an alternative economy. You see, the blockchain doesn't have any military posts or any. It doesn't stop just because there's war or because there is conflicts or because there is somebody at the border that says you cannot cross, right? So Bitcoin, Ethereum work all over the planet. Anyone who has connectivity, any kind of connectivity to the global internet can basically exchange or withdraw or spend their assets. And because of that, we have this shadow economy being created, people migrating from fiat currencies to these cryptocurrencies. And you see spike in demand in the last few weeks since this conflict started from those countries, right? You're seeing new accounts being created, you're seeing people buying these assets. And because of that, there's also liquidation of all the people who were short. There were a lot of people who thought, okay, Bitcoin's going down to 20,000 or whatever, I'm just going to short it here. And they all had to buy Bitcoin back. So you see this big spike back up, which kind of brings us back to a normal level. It was not in a normal level when it was at 35,000. So I think now we're at the kind of normal level. But now there is a ripple effect. What is the ripple effect? Many other countries that are watching China, watching Russia, watching even what's happening in Canada, where people just protesting are being their bank accounts and their crypto is being frozen. And both people and countries are saying, wait a second, can they freeze my central bank like they did to Russia? They froze their dollars in Europe or euros in Europe and dollars in the United States. Maybe I should buy some Bitcoin myself because they can't freeze my Bitcoin. So something that is actually negative to the financial market, negative to SWIFT and the financial infrastructure is actually positive for this new network where we are getting, for the first time, we're getting sovereign funds and central banks and financial institutions inquiring about, okay, how do I buy these assets? How do I store these assets? And Celsius also has another division called GK8, which provides all that physical infrastructure, right? How do you enable a bank or central bank or a bank or an institution, a financial institution, to manage these type of assets and still keep them safe, right? Because the problem is if somebody has a key, the private key, even if you trust them 100%, as long as somebody else saw that key, the assets are not safe. So Celsius has what called MPC, multi-party computation technology, that allows you to break the key into many parts, and no one can see the full key. They can only have their vote, but there may be one of only 5 people, and unless everybody votes to sell or buy or move assets, they're very safe.
Yeah, so basically what's happening now is opening the eyes of a lot of people about the current limitations of the current financial system that is basically completely in control of the governments and central banks that can basically freeze your accounts every time there's a crisis. And it's been the case forever, but most of the first world countries, developed countries, they never really realized that because they never really probably cared about what was happening in whatever, Venezuela or other countries where, when there is massive inflation, they can just basically stop you, or Lebanon, stop you from taking your bank out of the system, and then your money ends up just being nothing and you have no control on that. But now that it's happening in Canada or like more developed countries, people are actually realizing that this could happen pretty much everywhere, and these are the limitations of the current system. And we have this alternate system, which is basically cryptocurrencies that, if used right, so self-custody, basically can't be frozen.
Yes, and again, it's important to understand. I think that this the Russian central bank, it's the first time I think ever that the sanctions were put on a central bank. Even when we put sanctions on other, like Venezuela or Cuba or whatever, I don't think we put sanctions on their central bank. So I think here we went a step beyond, and the ruble, people went to sleep, they woke up, and the ruble was worth 30% less in one day. Just like in Turkey, people went to sleep, they woke up, and I think it's the dinar over there, right, was worth 50% less the next day. The Turkish lira, I think I don't remember what it is, but it's either the lira or, was worth 50% less the next day. All your life savings suddenly got cut by half, right? So those are the things that, when you experience that, and I lived through hyperinflation in Israel, I think it was like 400% inflation. So when I remember in Russia, when in the Ukraine, when I was growing up, every product had the price imprinted on the product. Like you had a toy, the price in ruble was imprinted on the toy. You didn't have to ask for the price, right? Because prices didn't change. And then basically the Russian empire collapsed, the USSR collapsed, and inflation was crazy, right? So all that stuff basically became irrelevant. So if you feel inflation, when you see inflation, you understand how vicious it is and how it ruins people's savings. So today, Bitcoin is besides being a safety asset, it's also the doomsday insurance policy. There's nothing else that is performing as well as Bitcoin, saving you or protecting you against these type of extreme events.
Awesome. Just how much time do you have left?
Few minutes, yeah, we can run for another 10 minutes, maybe. Yeah.
Okay, so basically, we understand, and people understand more and more about why crypto is so useful or important. So what are your thoughts on the crypto adoption speed, and maybe how quick is it compared to the internet and voice over IP adoption?
Yeah, it's a great question. I frankly, I'm frustrated with the speed of adoption, and I'm doing everything I can to speed it up, right? That's the mission of Celsius, is really, again, where can we find the next 100 million people? Now, I have a very selfish reason, which is the same reason that Michael Saylor is spending half of his time doing interviews, right? And it's because we all own Bitcoin, we all own Ethereum, and the only way for us to make these assets worth more is to bring more people into the network, right? So if we make the network bigger, if we make the network do more transactions, we all benefit. Everybody is on the network. If we just leave it to somebody else, then nothing is going to happen, right? So we all decided, Tim Draper and Michael Saylor, and now even Elon Musk and others, right? Or Jack Dorsey, right? All these people are phenomenal people that the industry is very lucky to have. They're all ambassadors and missionaries for the crypto revolution, right? So, but it's still not happening fast enough, and I want to talk about that because it's a very important issue, right? So you go from fiat land into crypto land, right? You buy a ticket, you get on a plane, you land, and immediately they charge you 7% just to buy your first Bitcoin, 7% in fees, right?
Yeah.
When you use your credit card, and you're like, wait a second, in fiat land I used Robinhood or I used Fidelity, I didn't pay any fees. You guys are supposed to be the future. How can the future charge me 7% in fees? And then you do something and you want to withdraw your coins and they charge you a withdrawal fee, and you're like, wait a second, you just like the banks. You charge
Yeah, it's
me
the same.
for ATM, just like they charge ATM fees to withdraw my own money. You guys charge me to withdraw my own. Then you do a transaction, they charge you huge fees on transaction, and you realize there's a spread there and they didn't give you the right price, and you're like, what's going on here? I thought this was the future. I thought this was supposed to be the solution to Wall Street. You guys are even more, you steal even worse than the banks. And we all know that banks are not your friends, So can I hodl? Can I earn yield? Can I take a loan without being ripped to shreds? Can I do all those things in this new environment and really save for the future? Because what is saving? Saving means I'm not spending and I'm earning more and more coins. I end up with more coins, and the coins are worth more over time, right? So if I'm constantly paying fees and I'm constantly moving because people tell me, oh, now you have to buy, now you have to sell, now you have to jump from this asset to this asset because this one is hot and this one is not, right? All that stuff just creates revenues for these companies versus creating financial freedom for the next 100 million people. So my frustration is that we copied, many companies in crypto have copied the worst business models from Wall Street and brought it into crypto. Instead of us copying or inventing, we talked about in the beginning of how we can invent new business models related to music or gaming or other things. Instead of doing that, we're copying some of the best practices because we take advantage of the fact that people are excited and they want to come here and build a financial freedom for themselves, financial future for themselves.
Yeah, absolutely. And basically it's the same every time. As you say, like every time, I mean, the way I basically convince people to start dabbling in crypto is, hey, look at those yields. For example, your dollars. And they're like, oh, awesome. How do I start? And I'm like, well, because it depends on the country and all that stuff, and the currency where you have your cash. So basically, you need to send money from your bank account to the bank account of one of these exchanges. Probably there, you send, I don't know, Swiss franc to euros. You're already like being destroyed on the transfer. And then basically you buy, and then you have these hidden fees and different exchange rate. And basically, if you just think about it, just to buy, I don't know, USDT or stablecoin USDC from Swiss franc or euros, you really lost 8%, which is what you can earn on the first year. So basically, your first year interest is already lost just because you didn't find the best way to get into basically crypto. And most people don't even realize that. So they think they're doing like a good thing, and then when you understand basically how basically yield compounds and all that stuff, and that you're already losing your first year of yield or even more by a few transactions, that's so frustrating. And it's basically one of the main reason why, I mean, it's a massive block, like a big problem, because people want to earn their yield, but first, either they don't know how to start because it's still too complicated to get into crypto, or second, it's actually wait, in your country you need to use this exchange because there's a lot of fees, but because your fiat currency is this one, blah blah blah, and it's horrible. It's horrible.
Yeah,
So,
and we all go through this learning curve.
Yeah.
And again, it's on us. That's why I always say to my community, you did well, now you have to do good. You have to go and teach other people. Celsius mission is do good first, then do well. But if you did well with Celsius, you parked your coins with us, you did exceptionally well, you have the duty of going and helping other people, because if you don't help them, guess what's going to happen to all these people? Half of the people that pay that 8% you just talked about are going to go back on that plane, buy a ticket back from crypto land to fiat land, and never come back again. They're never going to come back.
Yeah.
So are we here to retain these people, or are we here to just educate them that they should always stay in fiat land forever? Because that's what we're doing right now. Half of the people, we're sending them back. I just saw some statistics that like 30 million Bitcoin accounts have zero balance in them. Accounts that used to have a balance now have zero balance, right? Meaning these old people who left back to fiat land, they all got hurt. They realized that their fears were actually real. Their fears that people are going to steal from them. Their fears that they're not going to be able to earn anything, that this is all a scam or whatever, came true because we did not protect them. We, the people in the crypto community. So it's very important that, look, it's okay to have a profitable business. I'm not saying, oh, you shouldn't make any money, or you should only give all the money away. My wife sometimes tells me, you think you're the smartest guy in crypto? You're the dumbest guy. You gave your other people $1 billion. You could have kept it. So there's a balance between giving too much and not giving enough, right? And we're trying to find that balance. But for us, the most important outcome is, can we bring 100 million new people into crypto? Can we get most of them to financial freedom?
Yeah, absolutely. And it's exactly what we're trying to do at Yield Labs too. And to be honest, we got inspired by you guys because we're really early in Celsius and did well, and now want to do basically good, because what's the point otherwise? Absolutely. Absolutely. So maybe last question, where does this endless fire in the belly come from?
So look, again, I'm an immigrant. I was very lucky, right? I could have been right now in the Ukraine. Let's say I never left there, and I grew up there, and I did whatever I did over there. I wouldn't have these amazing opportunities that I got because I came to the United States right when the internet was getting started. I came up with an idea. I went to a bunch of people, and they said, "Oh, great idea! Let's invest in that." So Arbanet raised like, I think, $350 million. I'm talking about $1995. Now everybody's a unicorn. Back then, that was one of the largest investments in a company in the space, right, in the internet space. So we all of this success makes you think really hard about, okay, great, you made money, you live a great life. I have 6 kids, I have a wife I love a lot, and so on. What are you giving back? What are you doing to help other people? There's 8 billion people in the planet that are not as lucky as you. What are you doing to help them, right? And all of us have to basically make that decision. Are you going to chase more, or are you going to create something that helps as many people as possible? And the beauty of the crypto network, the beauty of this, the blockchain, is that we can help people in 170 countries all over the world. Right? I don't have to be there. I don't have to go and do classes in Vietnam, but people from Vietnam can participate in DeFi and CeFi and basically take advantage of all these things and create freedom and opportunities for themselves that basically 20 or 30 years ago were not possible. Right now, you can extend all of that worldwide, right? So this network that we're talking about, this financial network, applies to everyone on the planet, just like Voice over IP solved the communication problem for everybody on the planet. So voice over IP to money over IP, VoIP to MoIP.
So basically, yeah. So you're dedicating all your time and energy to basically help people, but it's really hard because there is all this regulation in the banking system. So what is it? Very last question: what it is to be basically in Alex's shoes and mind?
Well, so look, we raised a lot of money. Our last round was 750 million. We have some of the best people in the world coming and working with us at Celsius. Just our CFO used to be the CFO of Royal Bank of Canada, right? Our COO came. She managed almost 5,000 people at Citibank, right? But it comes with huge responsibility. We have over $20 billion worth of people's money. And again, it's not like we got $1 billion from some big institution, right? We have people all over the world that gave us their life saving and said, please, Alex, help us get to financial freedom. This is the $400 I have. Can I save it? Can I earn yield on it? So when I see people get hurt because they're trying to do DeFi by themselves, or they don't understand that sending money on the blockchain, you may send it to the wrong address, and you will never see it again. It just pains me, because this opportunity is also has a lot of risks with it, because people can make a mistake so easily, right? So everything we do is about protecting this community, right? Protecting it from itself sometimes, from allowing it to make mistakes and lose money. So for example, we only give you one withdrawal address, and we make it hard for you to change it, because we will send you money back from where it came from, but we're not going to let you send it somewhere else because it's not good for you, right? You can make a mistake and you're going to lose all your money. So, and all these things create friction. People say to me, why you made the system so hard? And I'm like, it's not hard. It's here to protect you, right? And our community, I think in general, probably lost less than almost anybody else, because there were no hacks, because there were no, I'm talking about like people stealing money from Celsius. So we do our best to protect the people who are trusting us.
Amazing. Do you want to add something before we wrap up?
So look, I think many times there's over 200 blockchains out there, right? And every day you hear how Cardano is fighting with Solana, or Polkadot is fighting with Avalanche, and I laugh. Like when I see that, I laugh. I'm like, guys, we're all in it together. We're all in it together. The competition is against TradFi, traditional finance. Can we build a bridge, a really, really big bridge, so we can onboard 100 million people, so we can onboard trillions of dollars in assets, instead of fighting with each other as to who has a better blockchain or who built a better castle, right? So Celsius, while everybody else has their own blockchain, we chose not to create our own blockchain. We chose to just build roads and bridges between all the different existing infrastructure and flood everybody with liquidity. Because if we all have liquidity, we all win together. And that's why, like, even though some people ask me, like, but why did you allow Voyager or Yield Labs or somebody else to use Celsius? Aren't they your competitors? I'm like, no, they're not our competitors. We all win together. The next big idea may be theirs, and then we will work with them. We'll take advantage of them creating this or that. So I think, again, it's important, those two sides of the same coin. One is do good. Don't steal from your customers. Don't charge them hidden fees. Don't create a reason for them to go back to fiat land, right? That's one side of the equation. And the other side of the equation, let's win together. Let's all, amazing creativity, amazing opportunities. Let's do it together.
Awesome. And the best way for people to win basically is to start earning yield on their crypto and download the Celsius app for that, which makes it super easy for people to earn passive income, which is what everybody basically wants and needs in life. Amazing. Thank you so much, Alex, for your time. That was awesome.
Thanks for having me.
Thank you.